JB here, May 21st, Wednesday, 8:57 a.m. Talk quick about markets. Some names I'm looking at go from there. S&P futures in the red, second session in a row. Markets, well, the S&P put an end to its sixth session rally yesterday. Open in red, chopped around for most of the day until about 2:15 or so. Then I guess the haggling over the tax bill kind of came to a head. Markets found some pressure. Tried to bounce at 3 o'clock. Almost looked like if we were open another 15 minutes, we might go back into the green, but did close in the red. Was kind of funny. Well, not funny, but the VIX. It's like it was an immovable object again, and considering it was at like 60 not so long ago, to see it at 18 and not do much, even with the market selling off, is kind of like impressive. So I don't know if you know is it uh peak not peak, but is too much complacency? We're back at historical levels, so these moves probably especially not as big as they've been. So anyway, not too much in the way of catalyst. Target had earnings this morning, missed estimates, lowered guidance. Not much in the way. I don't think that changes much. And then the whole story now is all about yields again. It's funny, just I make a joke. It's kind of like whack-a-mole, right? And the markets and the financial media, they find new moles that have to be whacked, right? So it's first it was stagflation at the start of the year. People worried about the yields were going up and worried about inflation staying sticky, lower growth. So that always came to a head. Then we had the tariff scenario, and the tariffs are still playing out, right? Then you had the U.S. dollar and yields in the midst of the tariff sell-off. You had recession worries, and it seems like every time something gets whacked down, the tariff situation that kind of got whacked down with China, then they come up with some other kind of narrative to spook the markets and get you to click stuff. And we'll see what happens. I mean, yields over in Japan certainly concerning. I think one of the ministers, the finance minister, came on, said, "Oh, they're in a situation similar to Greece's default." Again, I think I was talking about Greece the other day on one of the rants, but the difference between some of these countries, sovereign countries, like when you're part of the EU, you can't just go and print money. It's just not how it works, right? You have one currency for the whole EU, so it's a little different story. Japan, you have different situation, right? I would not say you can print yourself out of that scenario, but needless to say, their longer dated yields are at highs not seen since in 25 years. And it's a large economy. I think it's like the fourth or fifth or sixth largest economy on the planet. So I guess you could, you know, uh, t- keep your eyes on that. I guess. But today, now of course, now it's all about the 20-year bond auction coming out at like 1 o'clock today. All eyes on that. It's just funny how they'll just twist it. And I'm not saying not to pay attention. To always take things with a grain of salt, but you take a look, and I think I have the chart here. 30-year yield. So back, back when yields were going up to 10-year, it was all about the inverted yield curve, right? That's going to be the recession. The 10-year is you're getting more to hold the 10-year than the 30-year, right? So that's like, oh no, the people saying the short term, that means there's a recession coming, and recession hasn't come. I mean, maybe it is. Maybe we're already in recession, like people have been saying. I don't think that's the case. And now that that's been removed, now the 30-year is rocketing, right? It's over 5% at levels not seen since 2023. Call me crazy. So now it's not an inverted yield curve, so it's not a recession, but now it's a problem, or it's problematic. So you take a look at the 5 year, the 30-year, and I'm not saying don't take it with a grain of salt or what have you. It's always good to look at everything. I mean, if you trade the market, you should always be aware of risks, right? I mean, that's what it is. That's why you hold equities, right? Equities have risk inherent with them. It's just a matter of how much risk and how much you're getting paid to hold that risk. So you take a look at the 30 year, and it is up near 2008 levels, but it's not like screaming any kind of crazy alarm bells, at least in my opinion. And the other thing is the Fed has the ability to cut rates, right? I mean, the fund rate is at 4.25 to 4.5%, so there's room to maneuver. But for now, especially in this week where there's not much in the way of catalysts, people bring up these headlines because there's not much else to write about, right? There's no CPI data. There's no, you know, crazy headlines coming up, at least this week so far, knock on wood, with Trump. So outside the tax bill. And it's funny, the tax bill, right? If you've done this long enough, it's always been about kicking the can down the road. Quantitative easing, Project Twist, all the stuff Ben Bernanke used to do back in the day, and everybody like, oh, this is it. They're printing money. This is the end of the economy, the end of the U.S. dollar, and all that. And if it's done anything but that, and it's always been kicked the can down the road. At some point, that can can't get kicked further down the road. but you just told, yeah, who knows if it's now. And you know, everybody, if you have kids and things, of course, you don't want to hand the world off worse off than when you left it, right? I mean, when you got it, you want to make sure you hand it off to your family and kids better off, right? So hopefully there'll be some fiscal restraint at times. And you know, the whole tariff situation too, like that's tax income. So you got to think, you know, hopefully that helps offset some of the deficit and the, anyway, all right. So rants for other days. So for me, I talked about 586 to 597 on the SPY. We got down to 587 here in the pre-market. We were down at 586 on Monday. So kind of big areas here of support. I would love to see it close back over 590 here today. Tomorrow we get PMI data. So I mean, that could certainly, I think it's a 10 o'clock release. That could certainly add some fuel to the flames to the market if it comes in stronger than expectations. And I still wouldn't be surprised to see a 600 test on the SPY before the week is out. Call me crazy. But we'll have to see if the market could hold here. So, I mean, it's important. Also, you know, and you don't like to see the market go too far too fast. And I talk about consolidation, but the amount of stocks trading over their 50-day moving average in the S&P at 80%, it was at 4% on April 9th. So pretty remarkable stuff. And then a nice chart. I don't know if this is from Market Watch, but this is a percentage above the 50-day moving average for the S&P. So if you take a look, I mean, well above historical levels, at least over the past year, in regards to how large we are, or how the percentage above the 50-day moving average. So it just kind of adds more credence that there needs to be a little, you know, a little it doesn't need to be, but you like to see it because at some point, I mean, we have a bigger pull before the next leg up. So hopefully a little more chop here today. Market close over the 590 handle on the SPY and go from there. And that's that. So that's kind of overall market, just some individual names. And, you know, I got those Biogen calls on Biogen. Gap ran at the open, was all the way over 131, pulled back into the afternoon by the noon hour, back under 130, and then back up to highs by 2 o'clock. And then it pulled down with the rest of the market at about 215. Still trading nicely over its 50-day moving average. Hopefully, you know, I'm still waiting for that big 5 to 7% move. Maybe we get it today. Tomorrow will be nice. And then you know, the calls are still in the green, but need the premiums to start creeping in. So I'm going to need it to move here today. Also added Decker calls yesterday. Finally, you know, they'll have their earnings tomorrow after the close. The plan, you know, I've been saying this for a while, is that either I'm going to be able to lock some in to cover costs and ride some free into the report, or if I can't, I'm going to close them out and revisit. I think a beat and raise, it's over 150. Inline numbers or flat numbers, and it's probably you know, red, maybe under 120, and then a miss and it's back, maybe it goes under 110. So that's kind of the risk reward there. I have a little more conviction. I think it's going to be a beat and raise. But, you know, I'm not 100% certain, right? Nothing's certain. So it's a binary event. I prefer not to hold into the earnings. So I'll probably close them out if I can't lock them in to cover costs. Interesting days for Solar Edge, all the way up to $22 before pulling back, closing in a red, disappointing. But I think all things considered, especially the big move off its lows last Thursday, I mean, still kind of consolidating its move. So hopefully that can get going, you know, the next day or two. Still plenty of time on my freebie Junes, and hopefully it holds $20 here today. I was saying on the rant yesterday afternoon, Roku almost up to its 200-day moving average again yesterday, up to 72.26. If it gets over that 200-day moving average, I'll probably add strikes into next week. And then BIDU. So BIDU this morning, earnings, right? I mean, this one, sometimes I guess I say if it boggles my mind, I probably shouldn't trade it too much. But I was looking at Biden. I'm like, I just don't get the story's tough for me, right? Because they used to subsidize the rest of their businesses with their ad business, right? But it used to be like 90% of their revenue, similar to what Google does, right? But then as that business started to decline, they were looking for other avenues to drive growth. And they have their AI, they have their cloud, they have the robo taxis, they have I'm trying to think of course things don't hit me right now, but because of that, they used to spend a lot of money to try and get growth in those areas, and they used to struggle, and now it looks like they're finally starting to turn the corner. I think it's like they did $4 billion in revenue. I actually have to get the numbers up, but it's like $2 billion of it was their core business was declined like 6%, but then their other side of the business, which was the AI, the cloud, that was like 1.3 billion in revenue. So like, if you take a look at the breakdown, it's like 60% core business, 40% of the new business, and they're not that new, but they're maturing, but they're high growth businesses. And I'm like, how's this stock not trading over $100 right now? So it kind of gives me a little pause. I'm like, is it gonna run and gun right at the open, or is there something more to this that meets the eye? So I'll be watching it. If I see it start to break, maybe back over 93 in the morning after the open. I might look to get some spec calls because I think it trades up into the hundreds. Because like one of those stories, the other half of me starts thinking about BIDU. I'm like, does this mean BIDU? Because I used to trade BIDU back in 2006, 2007. It used to be like the darling of the China tech names and the internet sector. And back in the day, you didn't really have the Babas, uh, the PDDs, the all the other companies that have come out, the JDs, and and now it's like that market's like, did Baidu just lose to did Baidu become? And I used to be bearish on Baidu. I used to call it like the Yahoo of China. After I was bullish it for a while, many years, then I was bearish because it was like they lost their prominence. But then they started investing in other avenues, and those started to, I thought, bear fruit. So anyway, rants for other days on Baidu, but don't be surprised if I add some spec calls on strength if it finds any today. Um, and I think that's it, folks. I'll be back on audio later. Rock and roll.